Good morning, traders. Sorry about the delay in getting started today. It's 8:05 a.m. Chicago time on Thursday, the 21st of March, 2024. This is episode number 2641. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future resulta. All right, so the conversion trading pre-market summary sheet. Yes, my voice is still kind of not there yet. Much better than last weekend where I was talking but nobody could hear me. The pre-market summary sheet shows that the market's still in a risk-on sentiment from yesterday's Fed meeting decision and the notes and conference. A lot for the market to digest there. After the close today, we get FedEx and Nike. FedEx is expected to report $3.45, scheduled for 4:06 p.m. Eastern. And then Nike is scheduled for 4:15. Nike is expected to report 74 cents, FedEx $22 billion on Q3, and Nike $12 billion on Q3. Both are 5 out of 5 in terms of importance. So what are the themes for today? Today, really, it's about the digestion of the Fed, of the Fed meeting. Volume is low, huh? You might want to check your side. My decimeter's hitting pretty good here. Okay, so comments on inflation. Jay Powell was provided some dovish remarks. The main one being that inflation seems to be under control and employment strong. And the expectation is it's very likely, or it's possible, that we have a lowering inflation or a controlled inflation environment while employment continues to be strong. Now remember, the Fed's mandate is not just inflation, it is employment as well. It has a dual mandate. The other main news, of course, is the number of cuts expected for this year didn't change. 3 cuts in 2024. They raised the neutral rate to 2.6% from 2.5%. The other thing that came out overnight, NVIDIA released its outlook for the next quarter's earnings. NVIDIA right now is up 2.09%. 2.09%. The overnight, the U.S. dollar remains strong despite what the Fed has said. The U.S. dollar remains strong. The Aussie's also been strong. And then the BOE keeps rates steady overnight. Many comments from them. U.S. jobless claims came in a half hour ago, below expectations at 210 versus 210,000 versus 205,000 versus 210. Is that right? Let me make sure I'm not misquoting. Initial claims. Where are you, baby? All right, initial claims. Yeah, came in at 210 versus 215 expected. So you can see there that the jobless market is still relatively stable. What's on deck for today? 15 minutes after the open, we have the S&P Global PMIs, Composite Manufacturing Services. 10 o'clock, we have existing home sales. And then we have Fed's Bar at 12. People are going to pay attention to what Fed's Bar says because it is right after the FOMC. Then we get the inflation rate out of Japan this evening at 7:30. And then the British GFK consumer confidence at 8:01 p.m. And that's really it. The RBA Financial Stability Review, nothing really serious there. Okay, the S&P pretty balanced, hanging on to these higher prices in the overnight session, staying steady up there. 186,000 contracts traded. The inventory is 198% long. The range is decent at 22.25%. Remember, the mode of range is 20 points, not percent. 20 points. We're at 22 and a quarter points. Point of control shifting way up from yesterday's. Yesterday's was at about just over 500, 520, 52.20 or so. Today, 53.12. And so overall, just everything is super rosy. We're seeing a little pop up in cryptos this morning. You're seeing gold pop higher, silver pop higher, and copper as well. Crude holding steady. Crude having pushed through higher than the close overnight, and then has been selling off this morning. There's a news flow out of Israel and Palestine. Israeli official says our forces will control Rafah even if this causes a rift with Washington. So Israel boldly moving forward with its plan to invade Rafah. So that is more instability in the Middle East, which can potentially impact oil prices. All right, so let's look at the technical picture here. The technical picture is that, as we had been talking about all week, the market is not moving away from these higher prices. So it's just as discussed, I think, yesterday and the day before, it's just a matter of time before we take out the 47 and the 57 above for a push higher. So we've been in balance in this double distribution profile, right? And we've tested and retested down here at the 5,200. And we talked quite a bit about the fact that we are just not letting go of these highs. So you could see before, let's get rid of the extended hours. As you could see, so this is RTH only now. You could see that we push higher and then we pull back in this channel, and we're just not breaking to the downside. As long as we don't break to the downside, as long as we continue to trade against highs or near highs, what this does is it makes the higher prices a new normal, a lot like what we're seeing with inflation in food and so on, in consumption right now in real life, right? Whereas, before a loaf of bread might have been $2 or whatever, now it's $2.80 or even $3. And the longer that the loaf of bread is at $3, the more we accept that $3 price as being normal, that if it goes down to $2, we consider that a discount. And if it goes up to $4, we consider that too expensive, until over time the market accepts it. In a way, how do we mark acceptance? How do we detect acceptance of the new $3 per loaf price? Do you remember? The way we determine acceptance, sorry, there's like a 7 or 8 second delay. It's just too slow to be interactive. The way we determine if that price is being accepted is through balance, that people are willing to transact. If I raise the price of my bread in my bakery from $2 to $3, and I don't get angry customers and they keep coming in and buying the bread at $3, then that's my new normal. My price is, we're going to transact at that price as much as possible. It's great for me because it maximizes the number of the customers coming in, the demand, and I can definitely supply bread at $3, whereas I could supply it before for $2. And actually, the price from $2 to $3 might bring in more bakeries, more competitors, until to the point where the supply saturates the market, and then price moves quickly back to $2. So that's the basic premise behind profiling, behind the auction. Please, as a trader, don't forget that the market is an auction. It is not some algo controlled, Citadel or Goldman Sachs controlled or JP Morgan controlled thing. Yes, there is some edges that they have, significant edges that they have, but at the end of the day, the market is a value generating machine. It's a balance seeking machine. Believe me, if you format or you view the market from that perspective, it becomes a lot less hostile, a lot less emotional. So my point being, we came into this wedge here like we talked about yesterday. The expectation is it's likely to break it to the upside. Why? Because every time we put an excess high, we end up coming back and filling it in. And this day with the new high is no different. You could see the wick there. We came back and filled it in a little bit, and then we didn't really move away very much. We remained inside of the range of these 2 days, 2 Fridays, 2 Thursdays, and a Friday ago. We just remained within this range, and we just broke out to the upside. And so the expectation is now everybody that transacted in this zone, which there was quite a bit of volume in that zone, everybody that transacted in that zone is likely to be wrong, and it's likely to continue to push through to the upside as it did in the overnight session. It's currently trading higher than where it was yesterday. Okay, so as long as we don't have a supply that comes in and sees this as expensive, and offers it, and price moves away so that we have a legitimate excess, price will continue to push. So whenever you see price kind of holding on and sitting at the high, unless it's failing and making a rounded top, you really should be expecting the trend to continue. An old adage is the trend is your friend, and that's absolutely true. Here's another thing you'll notice about yesterday. Yesterday, the rally up left, it closed well away from value. So you'll notice the point of control and value. This creates an environment where it's very likely to snap back. So we want to pay attention to the naked point of control left behind yesterday, 52.42. We want to pay attention to 52.46, where the breakout happened. 47 actually, where the breakout happened. This structure here looks weak. It's somewhat weak. It has some single prints from about 67 to about 71 or so. So it's not terrible. The structure there is not terrible. And we didn't leave an excess high yesterday. So the expectation is overnight, it's very likely to continue higher. However, having moved away from balance, having left the point of control lower, it's likely to teeter up here. So the expectation as we go forward is any turn down is likely to retest this 47 area. Now we have the all-time high at 57, but the more significant price or support is going to be the 46, 47 area. Again, I'm not advocating that we go there now, that we're going to drop to 47, but I'm looking, when you are when you're sniping or you're shooting at a moving target, you don't shoot at the target, you shoot ahead of what the target's motion is. And so when I trade, I'm always looking a little bit ahead. You got to stay ahead of where the market is. The market is a forward-looking machine, and so I know that 47 is an important area as we come down, right? And so the structure is somewhat weak above here into the 47. That's where prices become more stable based on the auction that is taking place over the last week, including yesterday. Okay, so what do we do at these new all-time highs? From here, it's just measured moves. There's nothing technical to play with here. And so it's just proceed with caution. So what does that mean when price is at new all-time highs? We simply project prices based on prior swings, and all we're doing there is we're trying to create, it's like a grasp for, there's no auction basis for measured moves or projected prices, but we're grasping for straws here. We're looking to measure energy, and use Fibonacci extensions to do that. It's just math. Has nothing to do with the auction, so I don't have too much confidence in it, but it gives me something to pay attention to as others may be paying attention to it. So in this kind of environment where we're gapping up into new all-time highs, gap rules apply, and it's really important to sit and watch to see if the market will come back and be responsive and come back to the prior day settlement, or if it leaves a gap behind within the first hour. There's a statistic, there's a historical probability that if the gap's not filled within the first hour, the odds favor a gap and go situation. So if a market gaps up, especially into new all-time highs, and doesn't immediately want to drop and come back, as folks who are long now see a huge opportunity to lock in some profits, if it doesn't do that early, then you have a gap and go situation, and a gap and go situation in this kind of environment, you do not want to be short. So my focus this morning is going to be on looking at the rotations down. But wait, you said you don't want to get short in this kind of environment. Like, I don't care if it moves lower this morning. I don't care if there's a gap and go trade from 53.13 back to 52.86. I don't really care about that trade. What I care about is what the market's already said, which is the buyers have it. The buyers have the ball. And so if the buyers have the ball, I don't want to monitor the strength of rallies. I already know the market's in a buying imbalance, technically speaking. It's imbalanced to the buy side. What I care about is the quality of pullbacks. That's what's going to give me information. It's going to tell me how strong I'm looking to get long. I want to know how strong the other team is. So think of like war. Before you declare war and push your troops and tanks and whatever to the front line, you're going to go send your spies. You're going to send your drones. You're going to do your surveillance. And find out what the enemy has, so to speak. Not that sellers are my enemy, but I want to know how active the sellers are before I commit to being long. And that's basically going to happen in the first 15 minutes, 20 minutes or so. We'll get some indications. If I don't, it's okay. I'll sit it out, wait for the numbers to go by that are due this morning, and then trade after the first half hour's up. I've got all day. Also, I've been turning my attention to crude oil. Yesterday had some really decent setups. Crude has been doing these things where it tests lower, consolidates, and then has a short squeeze with an impulse, pulls back, gives an opportunity for a long, and then just pushes through. So we see that right in here. We see that right in here. Consolidates, pulls up, pulls back, tries again, and then you have the spike retest, no retest here, and so on. So crude has been creating some pretty good, and we've been talking about crude quite a bit lately. Again, don't trade crude, the CL product, trade the MCL, the micro product in there. So I think we'll have more clarity. It's not at all-time highs. When your product is in all-time highs, it becomes a little precarious to trade it. The NASDAQ remains relatively weak. The NASDAQ has not taken out the equivalent of that 57.25 in the ES. The overnight high didn't take the all-time high. So the NASDAQ, again, is trading this in this weak structure, which we had talked about before and said, hey, this is weak structure. The market had moved the point of control down on this day. So this changes things, and what it did is it ultimately created this balance, and we're moving away from balance. So the market's opening out of balance today. If the market's opening out of balance, we're looking for inside out trades. In other words, pullbacks in the direction of the market break. And that's the story with the NASDAQ. So same thing. We want to see, does the NASDAQ pull back to the 18.6 or so, the 18.020, the 18.620, the 18.600 area is the first base. If it breaks through there, then we're likely to see it gap to settle into 18.480. That's the NASDAQ. For crude has clearly rolled over here. Crude has breached yesterday's low, and crude is likely to pull back into the prior support and gap here. So crude's expected to pull back into the 80 over the next day or so. That's what I'm looking for there technically. Crude has found some sellers into the 83 and has rejected it very, very cleanly. Okay, I'll leave you with that. Market opens in 3 minutes. Sorry about starting late, and there was a lot of structure to talk about, so the show is a little bit longer today. Good luck today. Take your time taking trades today. There's nothing to force you to take trades. Take your time. Make sure that you understand what the market's bias is and only trade from that bias. Don't fade your own bias. It's hard to make money long term that way. You might make a trade here and there and win, but long term, you don't want to fade your idea of what the market bias is. Determine the bias, what the context is saying in the bias, and just simply resign yourself and relax into finding setups in the direction of that bias. This is, in my opinion, the best way to trade sustainably. Good luck, and I'll catch you tomorrow morning. Take care.